Ladies and gentlemen, I just want to clarify. I know people are going to start rioting. It wasn't me. Okay. I did not put us late. There's only one person to blame.
Well, that doesn't look like Tanner.
Tevis made us late, not me. But to be fair, Stephen Fiorillo came in perfectly on time. He wasn't even close to being late. He was right on time. So good to see everyone. Steve, how you doing?
Pretty good. How about you?
It's too early in the video for me to ask him. Roy, how you doing?
It's been an adventurous week, I'll say, but I'm glad it's Friday. I'm glad I'm here with you guys.
Tevis?
I'm doing well, man. It's been a quiet week for SoFi, but an otherwise eventful week for sure.
Not so quiet. I just saw you posted, less than an hour ago. Actually, maybe even less than 30 minutes ago.
Which is really annoying because I record my weekly video like at 4 p.m. or 5 p.m. on Friday. And this news came out like 2 hours before the pod, which I mean is good for the pod, but it's
what news?
Oh,
you want to see, Steven?
You have
it's going to get your blood boiling.
Let's do we want to start with that? Let's start with that. I think that's some pretty big news, if you ask me.
Let's jump right into it. All right. I know on my channel, I scratched out the SoFi weekly logo. This is going to be more fintech news because obviously SoFi did not see a ton of new things that happened this week, and there was a lot of earnings. But this did just come out. This is pretty big.
Yeah, so the January 31st filing came out, Steve, and we have an all-time high record, I think, of short interest on SoFi. 150.
Would really be right?
Yeah, 150 million shares sold short, about 16.5 or 17% of the total float.
No, I refuse to believe that.
Well, that's on the NASDAQ website, so take it up with them. But
that's
this
crazy.
brings a lot of interesting questions that I think I wanted to chat through. Number one is maybe Steve or Roy or whoever wants to take it can really get us into the psyche of a SoFi short seller post profitability. And
okay. I'll take it. I will take this. The only thing that, and I'm going to MarketBeat right now to verify this because I really don't believe it.
Dude, it's true. Go to NASDAQ site. I'll send you the link.
Fintel as well.
Okay, so they don't have it updated yet, so that's fine. The only reason that this could be happening is because of what happened with NCYB. That's the only thing that makes sense. Because they think that there is a big credit crisis coming. They think commercial real estate's going to blow up, and they think that the regional crisis isn't over. That's the only reason people are thinking this.
Yeah, I mean,
nothing else makes sense.
Well, the first thing that came to my mind was the lending guidance being down year over year.
Yeah, but that didn't happen now.
The NCYB thing just happened a couple of days ago.
Yeah, it was much higher price earlier. They should have went at,
I got it. It's the New York Community Bank. I don't know.
Has to be.
On the 30th, or I guess it was the 31st. That's when the news broke. I don't know like the daily breakdown, but if you look at the volume that they have on that day.
Are you guys familiar with what happened with NYCB? Roy is. Tanner, are you?
It was mainly due to two large loans that they had taken on from Signature, if I'm correct.
Yeah, that's 50% of the story. So they merged with Flagstar, and then during the regional banking crisis, they acquired a bunch of assets from Signature. Two loans are, I don't know the right word to use, but two loans are not looking great at the moment. And the big problem was their assets went over 100 billion, which put them into a category 4 large scale bank between 100 billion, 250 billion dollars in assets, which changed the requirements for their reporting. We changed the requirements for how much capital they had to have in reserves, et cetera, et cetera. So they had to cut the dividend. When they cut the dividend to shore up the reserves, that made the price tank. And then all this stuff about the loan book came out, and Moody's downgraded their rating to basically junk grade That made the stock come down. And then today, sometime during the day, it looks like their board and CEO all purchased shares, or maybe there's just the CEO purchased shares.
Really?
The stock went up.
Oh, is that because of the recovery there?
Yeah.
Okay.
I didn't know that.
So-
That's
Yeah, it's up 17% today because CEO board buy being down stock.
so they noted their own stock, in other
They
words.
noted their own stock. Yeah, CEO Thomas, can't pronounce the last name, Kagami, bought about 11,000 shares on Friday. Executive Chairman Alessandro Dinello bought 50,000 shares on Friday. Other insiders, including the bank's board, also acquired shares. So everybody bought.
So here's the thing, right? Because we could definitely fall into an NC or NYCB rabbit hole. The interesting thing that I sort of realized, as Tanner mentioned it, was this is as of January 31st, and SoFi reported earnings on the 29th. I wonder how much of that short interest increase was after earnings was reported, and how much of that was in anticipation of earnings being reported.
That's a good point.
Well, either way, they didn't cover. Nothing in the earnings changed their minds. So as of the 31st settlement date, whatever they saw, I think some of it might be SoFi specific. If people are really thinking it's just a bank, which it's largely a bank, but there's more than a bank story here. But if they're valuing it based on price to book, SoFi is like, wow, man, that thing's going to go down. And if there's a banking event and the BTFP is rolling off and expiring in March and higher for longer, all these pressures, well, then SoFi is going to go crashing down to like $3. Well, it's not. Like, that would take a whole lot to move it down that. And I will buy up that dip. But
when did Powell come out with those remarks, though? Because he made remarks about some of the smaller banks having to go under or merge, et cetera, et
It was
cetera.
the same day. So Powell mentioned, he talked about the strength of the banking side on the same day that NYCB it was that Wednesday.
It was that Wednesday? Okay. So
Yeah. Which is kind of ironic, but I mean.
So did you guys, any of you watch the Affirm earnings?
no.
Or as I like to say, the proxy Shopify earnings, because they brought up Shopify like 6 different times. They were talking more about Shopify than their own earnings, I swear.
There's only 2 things I know about Affirm earnings. One, that they went down afterwards, and 2, that David Chiaverini has a $20 price target on Affirm after earnings.
So earnings were phenomenal. Guidance was not so great. They were being quite conservative there. So that's what I'll say about that. What was important, though, was one of the comments that Max Levchin made, and the reason why I'm bringing this up for SoFi. He said that back in December, we had an ABS deal. I forget what it was priced at, but essentially they were talking about how they're seeing more strength and better pricing in ABS markets that from a deal that they made last week, right, versus what they saw back in December. And Max Levchin even said, this should be great for all lenders across the board. So think about that too. Even going into Q1, I was really worried that SoFi would have a hard time selling loans if the probability of rates coming down had lowered since Q4. But supposedly, from a company that's selling loans into this market, is giving us forward guidance saying, no, the market is really open to buy loans right now. So I don't even understand the short interest. It seems like they don't, like, I don't feel like I'm left in the dark here.
It's just, dude, there's so many conflicting statements, right? Like every company that reports says something slightly different. The major financial institutions reported, and then Upstart reported, SoFi reported, or was it Lending Club? And then Affirm, and they're all saying something slightly different. Like the market is strong, the market is going to be weak. I don't think there's like consensus across the board for what the environment will be in the new year, especially because a lot of the guidance is based on cuts, and Powell just, shot that down with regards to a March rate cut, which really affects the number of cuts that people are expecting for the full year in 2024.
I mean, yeah, I honestly wouldn't even look to Lending Club as too much guidance. I look to them to see who's buying their loan. I pretty much listen to an hour-long call for them to say, asset managers are buying our loans and banks are not back in the market yet. And then I should click off at that point, but I'm live streaming. So I'm like, I'll let everyone listen, but that's about as far as I want to go. If you think about Lending Club this way, they went through all of 2023, the entire year being extremely conservative, like something was going to go wrong. And then at the end, nothing actually came to fruition. And now they're saying what we expected in 2023 is going to bleed out into 2024. And they lost all that growth. And SoFi capitalized. And now SoFi is being conservative in 2024. So, yeah, it just seems like they're, I don't even believe in their management. I'm not a fan of that company, but that's a little off topic.
As far as the
Rick.
short interest, so I'll add that it's substantial enough, and the price of SoFi is enough that usually at this time, I'd be selling covered calls. My son and I talked about it today. He's got, not a huge SoFi position, but it's a few $1,000 for him. For him, it's good. But we're looking at selling covered calls on it, and we decided, you know what, let's not do it. When there's short interest involved, that can cause a lot of volatility in the stock. And this is already a volatile stock. So I'm preferred not to take the small premiums, me personally. If we could certainly go lower, but we could also go higher in a hurry if things change. People that are shorting the stock, there's some that are going to stick around for a long, long time. But a lot of these are just short-term bets, maybe a couple weeks, maybe a couple of months. And they typically will cover it in droves, and that will drive the price up. So anytime, and I did see somebody saying, oh, it's not that many shares. Well, it is for the size of SoFi as far as the float. Whenever you get into the double digits, that's when you actually can start paying attention. So, for instance, in Palantir, I think it's like 6%. That's nothing. If you look at FANG, most FANG stocks, pretty low. But double digits, especially high double digits, approaching 20%, it's something there. I would never invest in SoFi because of a short squeeze, but it certainly could happen if there's a catalyst for it, and then shorts start piling up. So I'm just saying I'm being careful on the other end because this can run up fast in a hurry. It may not happen, but it's not worth the small premiums that I'd be getting right now.
So here's the thing, though, right? Like, we're at 17%, and we hover anywhere between this point and 11%. And I know Chris Hager has talked about this in the past. We've talked about this in the past. Like, is the float too? Is the percentage too small for there to actually be a short squeeze? Because this is where I continuously hear conflicting pieces of feedback. Where I think 17% is definitely enough. If you have the right sort of matches to light that fire, then you can definitely have it. But there are people that say, hey, it's just not going to be enough to fuel some squeeze that's going to happen. But yeah, I agree with you.
Consider a squeeze? Look, everybody's definition of a squeeze is different. I think you got to identify what you consider a squeeze.
Did we see a squeeze in December, Steve?
I don't think.
I guess by the numbers, technically we did. We went from 140 million shares sold short to 118. So you could argue, hey, 30 some odd million.
You could argue it. I mean,
gamma squeeze, I think, maybe, if anything, not a short squeeze.
I think to be a short squeeze, I think this would have to go up 40% or so, and a lot of people would have to cover.
Speaking of high short interest, this is not a fintech company, but Tevis, could you answer this question? What is the short percentage of float on Celsius stock right now?
I found this out on Wednesday in real time on the Cash Flow Chronicles show live. 40%.
Yeah, it's
40%.
And here's the thing people are not realizing. Pepsi owns 500. They made $550 or $500 million investment in Celsius last year. Celsius is utilizing their distribution chain. Look, the valuation didn't make sense to me, but I certainly didn't think it was anything crazy. I thought Monster, just from their margins and everything, was more interesting for me, but Pepsi's not letting this company fail. They have a vested interest in them, and the fact that they just pulled forward so much growth with expanding into several international markets quicker than expected, they're utilizing Pepsi's distribution network. These shorts have a lot of courage. That's all I'm going to say. They have a lot of courage.
I've already bought cases here in Canada, so hopefully I'm single-handedly bringing up their international revenue, but trying to. But what's it called? I actually I don't want to go too far into a Celsius conversation, but their margins are improving. Like they'll get there. They're growing at faster rates than Monster has ever grown in their entire existence.
After hours, maybe.
Amazing stock still. I mean,
good point, Roy. It's just there's not a lot of SoFi news, so I just thought we'd just talk about everything. What would you guys like to talk about? Do you want to go into a little bit of PayPal?
Let's talk about alternative assets.
Are we done on the short aspect? This is the highest ever.
I guess so. As far as short squeeze, it's right to talk about it. Again, I would not invest in a stock just because of the short potential. But with short squeeze, I wouldn't think like AMC or GME type squeeze. We don't have that kind of macro environment. There's not that kind of interest or anything. And 17 is high enough for a short squeeze, but it could do something like a 20 or 30% pop in a hurry. If there's the right catalyst, if the market is flying, there's a lot of ifs, but there's enough of a chance of something like that happening over the next couple of months that, at least at this valuation, I'm not interested in selling covered calls. I'm just putting it that way. So I don't suggest short-term bets for that reason. I'm not making short-term bets. I'm just buying stock at this point, to be honest.
I mean, look, man, they could pull a Palantir, right? First quarter profitability, they give up all the gains. Second quarter profitability, they double.
I thought you meant...
This is interesting. Jim Cramer is bearish on PayPal, which means the bottom is in.
Yep.
Well,
Confirmed.
Here's the worst part. Jim Cramer is positive on SoFi.
He's positive on Palantir, too.
Yeah, he's Mr. Palantir. That's
Mr. Palantir. He even used the word bombastic.
Yep.
He was bearish on Bitcoin, and now I think Bitcoin's back up. So,
well, there you go.
bless that man. Somebody protect him.
Jim probably takes bets to say the wrong thing on certain positions. We'll give you $1 million if you come out and say that you're anti-Bitcoin for 3 years.
Don't say that. Come on, don't say that. Don't say that.
No. Everything that I say is completely non-joking, and everyone like Steve is going to take everything that I say for fact. No, dude, I can joke around. It's a joke.
No, you can't. It's not allowed. This is why we created Bootleg Weekly, because you're stupid.
where there's only facts.
Okay, there's exactly.
You're the straight man, Tanner. You can't. Jokes are not allowed. The rest of us, especially Steve and I, we can joke around, and Tevis will just die of laughter either way, so he can do whatever he wants.
I'll just be this spreadsheet nerd.
That's right.
Of
course, boy.
Somebody even said it. Tevis chat equals party. Tanner chat equals lame.
Tanner's chat equals make some money, dude.
Yeah.
Tevis, make some money and have a good time at the same time. But
Yeah.
making money, and I mean, that's fun.
By the way, speaking of me and Tevis, we should talk a little bit of Adyen. That's what we should talk about today.
There's not a single one of these 500 people watching that wants to fucking hear about Adyen.
That doesn't want to talk about a company that's performed better than any of the other companies we talk about.
So Tanner, what I would suggest, maybe spend a minute on it, but then share like your mistake, because I think that's a really valuable thing.
Here's the thing, Tanner. If somebody in the chat can correctly get Adyen's ticker and post it, then we can talk about Adyen.
Sorry, what? If someone has to say the ticker for me to, is that what you said?
It's like a random European stock. Yeah, it did fantastic, and we covered it on Stock Tank, and we, it was like a cool episode because you sort of nailed that trade. But other than that, the audience for it is quite small. Yeah, that was definitely your chat.
First comment.
That was definitely not my chat.
Yeah, there's okay. See there. I mean, yes, that is, but that's not. Okay. Then let's go on to PayPal then, because I'm sick of this short interest on SoFi. We get it. It's happening. Is it changing any of our opinions? Like, come on.
Well,
now
back up real quick, Tanner. Like somebody had asked about your mistake on Adyen. Could you just share that? Because I really do think that that's a really valuable thing for somebody that's a new investor.
Are you clowning me right now?
No, I'm not. It's a
Okay.
really important lesson. Steve will agree with
Roy
this.
just
Tevis, maybe not.
raised his voice. Oh my god.
Okay, so I'll tell you guys the exact trade. So Adyen down whenever I pitched Tevis. I was buying before that, so I was buying in the $8, like it was right around $8 exactly, and then below. So my average was somewhere in the mid sevens. At the time that I actually pitched Tevis, it just worked out so perfectly. It was $6.80. It was like almost the exact bottom. So it was perfect, but very near where I made the trade. Then 4 months later, after we did it, now today the stock is at $16 a share. I did not reap the full benefits of going from 7 to 16. I got out whenever it passed $13, which to the way that I looked at it is the stock stayed at around 13 for a very long time. And I thought, you know what? Probably going to have another 12 months before this stock does another run. I was wrong. Earnings call came out. The stock ran another 25%. It's up to $16 now. Analysts are raising their price targets to 18 now. The real lesson, at least, is one that I try to preach all the time, and I don't listen to myself, is exceptional companies should stay in your portfolio, and you shouldn't try to play price. And Adyen is a true exceptional company, and I had an unbelievable price. But then again, opportunity cost was front of my mind at the time, and I wanted to get into a position that hadn't made that run like PayPal.
Here you go, Tanner. I got a consolation prize for you if you want to throw that up. This was my post earlier today on Palantir, and this I feel is representative of you on the Adyen earnings call, where you run up. And it's the same thing, man. For me, for PayPal, it's like, buys at 8, sells at 15, goes to 25. Fuck,
Not PayPal, Palantir.
Yeah.
And so to back this up and to bring this back to SoFi, SoFi is a company that is phenomenal. Stock, you may disagree. Stock is very volatile. The company is amazing. At some point, the valuation will catch up to what the stock is actually, or what the company is actually doing. It's best in these times right now, while things are depressed and down, to try to figure out what you want to do. What are your goals? Is your goal with SoFi a long-term hold that you want to hold until there's dividends and you turn like 80 years old and you have a dividend portfolio like Steve's? Is your goal like a 10-year thing? Is your goal like a certain price target? Are you going to take some profits? How are you going to play that? So look at that. Think about that now. Because if we do get that pop, if we do get that short squeeze and it runs to $15, then is not the time to decide what you're going to do. Now is like, okay, what amount am I comfortable taking off the table? What amount in this company that's executing do I want to keep? At what price? Like if it jumps up to $30 next week, I'm completely out of SoFi. I'm done. I know that. Does not deserve to be 30. It's a great company, but I want to be in this company for long term. And so even if the stock doubles, I'm not in SoFi for a double. I'm not. I just know that. But some of you guys might be. A double is great. So don't make Tanner's mistake. Think about like it's a great company and think about what you want to do with SoFi now before the excitement and this can go to $50 or $100 hits. We're in that right now with Palantir. I won't talk too much about Palantir, but I heard on some spaces the other night where somebody's talking about Palantir going to $100 maybe like in June. And I'm like, no, it will not. I guarantee that. There's no chance. 50, very, very unlikely. 35, it's pretty unlikely. But so make your plans now. Think about what you want to do, what your purpose is in the stock. Approach it that way while you're rational and level-headed. You can change your plans based on the data, but just if they're executing and doing well, who cares what the stock price is unless things get crazy?
Yeah, but so one thing I will say is with regards to Tanner's individual position, like what most of the audience probably doesn't know is like Tanner runs a mini ETF. And so he can sell Adyen because there's a million other positions that might be down and out. And like there's opportunity cost there. There's benefits. It's not like he has, 80% of his portfolio into Palantir, and it's like, well, if I sell all my Palantir, then what am I going to do, kind of thing. Like you have to reconstruct an entirely new plan as to what do you want to back. But I do think that there is a little bit, and just to push back on you, Roy, because we talked about this on Bootleg Weekly on Wednesday, where you were like, I'm still holding, 20, 25. I'm still bullish. I'm still, for the long term. And that's all great and all. But it's like, at the end of the day, it comes down to conviction, right? Because if SoFi triples from here, goes from $8 to $30 or, 25, whatever you want to call it, you would sell SoFi. But the reality is that Palantir has done the exact same move. It's just tripled. It's gone from 8 to 25, like pretty much the same thing. And then you're like, I'm holding this for. And so my point to you is like, well, that opportunity cost is a real thing. And unless you fall in love with that stock, and then you're like, well, I don't know, I'll hold this for the long term, even though it could underperform over the remainder of those years to still get to that 5x or 10x or whatever I'm looking at. Like if I think a stock is going to do 10x for over 10 years and it does 5x this year, well, if I'm still looking at that 10x, and it's going to theoretically underperform for the remainder of that time, right? So I don't know. I just think that it comes down to how much you love a stock, and Adyen was not, something that he was in love with. It kind of makes sense.
Is there some sort of theme going on? I've seen so many people post. This is like the third time I've seen this, where people are talking about how much money they'd realize when SoFi gets to $2,000. I've seen multiple people do it now. What is this?
I think that's pesos, maybe. I don't.
Yeah.
No, that's Canadian money. That doesn't even count. That just
is that like a 2 trillion market cap? What is that?
Yeah.
Oh, okay.
No. That might be 200 billion or 2 trillion, something like that.
But yeah,
there's
no
$2,000. All I have to say is, holy shit!
Yacht party. Everybody bring your own yacht.
Right there.
There's more than enough room on the yacht for everybody. Don't worry, guys. You're all invited.
We can all buy our own yachts.
That's all I would say.
But no, there's no like right or wrong answer. It's better to determine what your plan of action is, your conviction level before that run. In the middle of the run, that's a miserable time to do it because those emotions are kicking in, and you want to approach that stoically. Unless something is fundamentally changed, you can change what you're planning to do, but make your plans.
You know what the interesting thing is? Nobody's believing Noto. That's what this comes down to. You either believe the guy or you don't. I mean, I don't know what else to say. He gave you guidance for 3 years. You either believe they're going to execute or they're not going to execute. I don't know.
I got a pretty interesting video coming out tomorrow with someone who does not believe in Noto at all. So it's going to be a good one.
Can you give us just a quick synopsis of like the main reason why he or she doesn't believe in Noto?
So they come from a background, like an actual Wall Street analyst who has been in the banking space for a very long time, 40 years in Wall Street. And the numbers that SoFi is putting up, he just doesn't believe. He doesn't believe that financial services companies can have moats and they grow based on pricing. So, so
that's different. That's not believing in the business, not believing in Noto. Like does this person specifically not believe in Noto?
Not believe in Noto.
Is he using the F word? Fraud? Is he using fraud?
So I asked about that and we spoke about that. I'm not going to. You got to check out the video. I mean, I got to promote somehow. So, but it was honestly a great conversation.
When's it coming out?
What?
When is it coming out?
11:30 a.m. tomorrow.
Yeah. Is it RAM?
It's not RAM. So honestly, this person had a great time. Even if the person disagrees or actually agrees with me, every single time that I've had someone on the show, they said that they would be happy to come on again. So I'm not trying to make enemies out of anyone. I want their honest opinions. And like I said to him, and I said in the video, I respectfully disagree, but we come from two different sides. He's been in Wall Street for 40 years. I haven't even been alive for 30. So Like we're on both sides of the spectrum, and it just made a great, for a great conversation.
I have a question. Did you go through Noto's actual resume with this person?
No.
Okay. Does this person know Noto's resume?
I don't know.
Because it's really hard when you actually look at him from West Point, Army Ranger, Warden, his career at Goldman Sachs, CFO of the NFL, CFO of Twitter, to CEO of SoFi. It's just very hard to not believe in this guy. I'll buy the story of you not believing in the business. That's fine. You won't get a complaint from me. You want to believe that fintech is in for hard times? I can buy that, but not believing in somebody that has accomplished everything that Noto has accomplished is a much different thing. And that's where I have a problem. He's never given anybody a reason to doubt him. And he's accomplished more than what 99.9999% of people will accomplish in their lives. So to say you don't believe in him with that pedigree, hard for me to take you seriously.
The only thing that I would counter to that is that if you find, in my opinion, if you find really any $10 billion plus company, usually the CEOs or founders of those companies are unbelievable rock stars. So,
or they're lucky.
Or Alex Chris.
Yeah,
all
but
three.
He's got an unbelievable track record.
He does.
So okay, look, we're halfway through. Tanner had his plug. We can talk about PayPal the rest of the time. Just as an intermission, do we want to very quickly talk about SoFi's new executive? They had an
I couldn't care less, but you can do 3-minute segment on this.
We can talk about Alternative Asset Weekly.
Coming to YouTube
there you go.
Do you also want to make a plug, Steve?
Yeah.
I have been acquiring boxes of Pokemon cards.
Pokemon.
There you go.
Oh my god!
And he's not going to open them.
Steve, no, sealed product. Okay, the last 5 minutes, I just want to show some graphs. You guys are going to think that you guys are going to go crazy when you see these graphs.
That should be an after hours, though.
After hours.
Some Pokemon charts. I think that's some after hours content.
I gotta do Palantir Weekly.
Steve, have you ever seen the movie The 4-Year-Old Virgin?
Yeah.
Okay. So SoFi.
Are you saying he's Steve Carell right now?
No, that's what it reminds me of.
For sure, no. Perfectly
shrink wrapped.
Yeah.
SoFi appointed a new chief risk officer. The former chief risk officer, Aaron Webster, they moved him into the organization on a more ops-facing role, where he's going to be focused on Latin America specifically, which is interesting to me, at least, because Noto has been talking about geographic expansion as part of the 2026 roadmap. And so I'm like, oh, interesting that they moved this executive to Latin America operations specifically, who is the former chief risk officer. He's also still reporting into Noto. The new chief risk officer, get this, Steve, this guy is,
I saw the news. I saw everything.
Yeah. Okay. Tanner, then, who hasn't seen it?
I
He's
haven't
done
seen it.
10 years at Bank of America, followed by 9 years at JP Morgan, followed by almost 3 years, 2.5 years at Wells Fargo. And he's just coming to SoFi now as their new chief risk officer.
Who's the new board of directors person that we just took on? Something Green?
Dana Green was a New York Fed member or senior advisor, something to that effect, for over 30 years, I think 34 years.
I think that's the biggest proof that the things that SoFi is doing is not fraud, to be honest. People don't want to be anywhere near it. If anything, you know what I thought about? I thought Larry Summers just actually left the board of directors of Block today. He said, I'm going to spend my time doing something more important. And I was like, oh, no. That sucks.
Jack Dorsey strikes again.
Yeah. Pissing off Larry Summers, not what you want to do.
I'm looking at this comment from Ken Megan saying he worked at Wells Fargo during the cleanup years. So this was like over the last 2.5 years. Wells Fargo, I think they had their problems in like the early 2010s ish, if I'm not mistaken. But I sort of made a joke in my video to say, like, if we needed a chief risk officer from any of the old banks, like Wells Fargo, this guy's probably like been in the shit, and he's probably seen it, and he can probably navigate it. And so, yeah, that company is as rough as they come from that perspective, like a new scandal every year. So we'll see what happens.
We will see what happens.
What's it called? I wanted to ask you guys a question because it's been something that I've been thinking about a lot, and I'm not going to say my opinion. I just want your guys' opinion here. And then maybe I'll say it afterwards. But do you guys think that SoFi has a good company culture?
How would we know? We don't work there.
Well,
better than 2017.
Yeah. Do you think that they have an innovative company culture?
How would we know? We don't work there.
Well, do you think that Palantir has a good company culture?
Yes.
How would we know? We don't work there.
Oh, they
I
have
would say a lot of people would say yes. I think people, the news gets around the scuttlebutt gets around. Okay. Like, I think people find that stuff out. Like, I would say companies like Nubank have an incredible culture. Shopify, Palantir, Adyen. These are companies that are known for having unbelievable cultures. And they also make for one-of-one companies, exceptional companies. And if I'm to be very honest with myself, I haven't heard much or know anything of SoFi's company culture being truly exceptional. And my question to you guys is that if you're looking for innovative growth companies, is that a problem to you guys? Do you guys look at something like company culture as being a problem?
Doesn't even come on my radar.
Yeah, I know it doesn't for you, Dividend Boy.
No, but if you don't work there, how are you going to know what the culture's like? Like, you got to truly work somewhere to know what the culture's like, or personally know somebody and take their word as gospel.
No, I mean, there's Glassdoor that you can look at, and I mean, look, the company.
Come on, Glassdoor is
no. Hold on, let me give you an anecdote, okay? So I'm on.
Where, I get bit by a rattlesnake?
No, hold on, bear with me. In my day job, I lead our product team, and our company just got funding, and as a result of that, we've more than tripled our headcount over the past year in 2023. And throughout that entire process, we're hiring handfuls of people every week. Essentially, company culture changes really fast, and it becomes untenable at some point where you need actual mantras, or you need something top down that everybody can follow, and that's simple to follow. And the thing that I wanted to say, Steve, is that our people and talent and HR teams, essentially, they look at Glassdoor religiously because every candidate in interviews will compare you with, if you have like a 3.8 at Glassdoor versus like a 4.2, those are drastically different companies. I know it's like that in the startup space. I'm not sure how that extrapolates to companies that have 5,000 or 10,000 employees, but Glassdoor is similar to Blind as well. Like, these forums, especially for software, they are a source of truth, and if the employees are using it as a source of truth, then we as investors can gain value from also looking at it in that sense.
I'm trying to look up Nubank on Glassdoor right now to see some reviews, but from what I could see just on the side, it's wanting me to sign in, and I'm hoping I could do that without having to take that much time. Anyway, I guess that's a good signal for the company. However, I mean, you talk about a company like of those size, like Shopify, like Nubank. These have thousands and thousands of employees, yet still what people say about these companies are that they still have very strong culture. Maybe that's an exceptionally hard job to achieve. But I do think that it creates unbelievable companies. And maybe that's too much from a technical or maybe an emotional standpoint. But I have found it to be a pretty great indicator for companies that beat expectations.
Well, obviously, you want the culture at a company to be good, because when everybody is happy, they're more productive and they care about the company's direction. They
Sure.
take more pride in their work. I mean, you don't want a company to have a bad company culture because then you have disgruntled employees. Like anybody who doesn't want the company to have a good culture is crazy. What I'm saying is I don't work there, so I can't personally assess it. So it's not something that goes into my equation because I'm not going to look at Glassdoor and look at negative reviews and take that as gospel for the simple fact that it could be people that were fired for a good reason. We don't know. And
Yeah.
unless you know somebody that you trust that works at a company, it's very hard to come away with that assessment. We can assume what we want. The facts are we don't work at these companies. So us giving an opinion on that is a little hard. Now we can give opinion on numbers because numbers don't change unless you're cooking the books. So a 10% growth rate is a 10% growth rate. A dollar profit's a dollar profit. But that's
So
an opinion with culture.
Yeah, and I agree. It's not the most important thing. It is important, but it's hard to assess
It's
sometimes.
important, definitely important, but it's hard for us to say if they do it
You
or if they don't.
normally, yeah, you normally know if culture is great because that leaks out, or if it's just absolutely terrible. But when it's just kind of neutral, then it's hard to tell. But we actually, so I work for a top 5 online university. It's massive. We had an all staff meeting this week on this exact point. There were some surveys that were put out, and there's a lot of organizational change, a lot of good stuff. But frankly, the culture aspect has been lagging, and it's been causing some issues. And what it does is it makes people basically mercenaries. That if they don't really believe in the vision, they don't like the values, they don't love the hierarchy, they don't love their coworkers and everything, then it's really just about a paycheck, which is fine. You can have a job like that, but that does not produce longevity.
No, you want
so
people
then
to believe in the mission.
Yeah. And so like there's pay. I think that they went through these 8 different standpoints, and pay was like the 6th most important for a large organization. In education, it's a little bit different with others. Pay is pretty important, but it's like Maslow's hierarchy of needs. That once you have those basic needs met, maybe a little more pay is nice, but you would trade most of the time if you have a nice pay. Like if you're making $150,000, you'd probably prefer to make $150,000 in an organization that you love, where you love your coworkers, you love what you're doing, it actually excites you and invigorates you, and you love the leadership, versus make 10,000 more but just be miserable 40 hours a week.
I would honestly, I think take the opposite side of that stance to argue that culture is increasingly more important the smaller that a company is, because you have more fail points. If a company is 1,000 people or 5,000 people, then it's like pretty much a studied result that they're going to have mediocre output, as opposed to having a company of 10 people and 2 of those people are exceptional, therefore they have a higher impact on the output of the company. And then that's the first point. Like, it sort of normalizes the law of large numbers. And the second point is that I would imagine that for public companies, especially Fortune 50 public companies, that the stock would be a much more tantalizing reward than company culture. Like if I had 2 options and one was toxic, or meh, working at a bank, versus one was like super exciting culture, but the meh opportunity gave me way more stock, and I know I could cash that out in a year and make a whole bunch of money, then I would ride that out, right?
Not for long, though.
I'll tell you, I worked for a $70 billion publicly traded company over a decade ago. And when I was there, culture was amazing. After I left, I stayed in contact with some people, and they say it was a completely different place, et cetera, and
held
they
it
were
together.
not happy. Like, you don't want to be. Culture is one of the most important things for any company. It doesn't matter if it's 10-person company or 100,000 person company. Culture is extremely important, and you want your workers and your employees, your partners, your stakeholders, everybody up and down the line to be extremely happy, because the second somebody becomes toxic or somebody becomes negative, that can start to breed through the ranks, and that's never good. Like, culture is super important. It's just, unless you're there, it's very hard to gauge it. That's all.
I think the reason why I brought this up is, and some people have asked in the chat, like saying, is this important to talk about right now? But I think more increasingly in my portfolio, it is something that I'm like, it's becoming a little bit of a requirement. Because I'm realizing these are the companies that stand out, especially if you can find a massive company. You look at like, well, insurance is kind of hard. Like certain industries, you're not going to be excited to go to work. But you look at like OpenAI or something, which could be valued at $100 billion, and the CEO almost gets kicked off the board, and 90-something% of people say, you know what, bring him back. Like that level of conviction is so hard to find anywhere else. And to try to spot that, I think, is a difficult question. But it really does take you from a mediocre growth company that's based on numbers versus a company culture that will survive ups and downs. And
there are many situations that if a certain person left, a lot of people would follow.
Yeah, it's like way more heavily skewed towards direct managers, right? Like people work in small tribes in large organizations. You won't know people in another remote office or another department or whatever. But
would you say that Tesla's company, a higher percentage of employees would say we're here for Musk rather than Intel?
Well, Tesla's company is polarizing because everybody, it's self weeding people out. Everybody who either can't handle the workload or isn't fully bought into the mission is immediately weeded out. They're either fired or they burn out and quit.
Yeah, but I'm saying look for those companies.
Okay, but like, let me ask you this then. Can you, off the top of your head, name a company over $5 billion that you would think has a shitty culture, horrible?
No, I'm not talking about shitty or horrible. I'm saying there's a bunch of meh or fine or average, but I'm looking for exceptional to the point where it is a point that people know. The Teslas, the Shopifys, the OpenAIs, the NVIDIAs, where people are there because of the company culture. Like you look at Nubank, I'm looking more at Nubank. I'm going, the compensation is not that exciting. And yet it's like one of the most exciting places to work in Latin America. You think it's because of the stock-based compensation that they're getting on this company? No, it's because I truly think that there's a problem that they're solving that people can actually get behind. And you can't find that in every stock. And I'm not saying that means that those companies are not great stocks to buy in. I'm just really trying to refine the way that I'm looking at companies, and I'm going after innovative growth companies. And part of that, finding that innovative culture, is also finding the difference between people working at Adyen versus people working at PayPal. Because the people who go to work at PayPal are going there because it pays a lot, and people that are going to Adyen are going there because it's an unbelievable mission.
Tanner, I got a question for you.
Yeah.
What would I tell you if you could invest in something that you didn't have to worry about company culture?
Okay, either you're going to say Pokemon cards or ETFs.
No, all I'm saying is, would it surprise you that a sealed product from Pokemon has outpaced the S&P 500? Would it surprise you, sir? Because I have the data.
No, bro, you sent us the PowerPoint, like all of us in our email. Like we've seen the deck.
No, I redid the numbers and I made nice, pretty graphs.
All right,
outpaced the S&P.
Do we want to talk about the PayPal earnings?
Let's do it.
People are not working at NVIDIA for stock compensation, by the way.
Talk about PayPal.
I just want to say really quick, the stock has gone through periods where it didn't absolutely explode and become one of the most important companies in the world, right? It's been around for 30 years. They haven't been around for stock-based compensation. It's a good paying company. It's a high education business, but only recently is it being an unbelievable driver of the stock market.
I don't know, man. I have plenty of friends that work for Shopify. Like I work in the tech space in Toronto, and Shopify has a massive presence in both Montreal and Toronto. And they all say to me the consensus that it actually pays below market, like towards the lower end of whatever market rate is.
There you go.
But at the same time, from chatting with them, it's not like nobody has really praised Shopify's culture. Like they say it's cool and what they get to work on is interesting, but it's mostly the fact that even when I try to poach people from there, they say, no, I want Shopify on my resume because it's like the biggest company in Canada. It's going to open doors. It's like the Apple, the Googles or whatever. And so usually those things go hand in hand, right? You have a strong culture that leads you to having this like top of the line product, top of the line company. But I'm saying in areas where they are mutually exclusive, people that work in large companies place less of an importance on culture than people who would go to like a startup or something.
Sure.
That's all I'm saying.
And I think the larger it gets, it's definitely harder to keep together. But okay, let's move on from that. We got 10 minutes. Let's talk about PayPal for sure, and maybe if
no, it's important.
Why?
Steve, you're a shareholder of PayPal,
dude. Now that you guys are all fucking content creators, you all are talking your own book. This guy is plugging. This guy wants to talk about alternative assets. Like, can we just do a fucking show where we just talk?
I'm just saying, we spent so much time in the past couple of days on PayPal. Like, everybody's heard the rants. Everybody's read the tweets.
I think
Alex
what people
Chris hasn't responded to anybody.
As a new content creator, I would warn you, Stephen, that no, not everyone has heard it, and that some people watch one video and they're not watching every single piece of content that you're putting out. So I think that if you guys don't want to talk about PayPal, I'm fine. I just think that it's a company that we've talked about before, and they put out pretty polarizing earnings.
Let me just have a couple of minutes.
The guy didn't come on, he didn't do damage control, and now we got to wait 3 months to see what happens.
So
let me talk.
Let's start here. Let's start at Roy's open letter, and then work our way backwards, because I think that was a great letter, Roy.
Or just say what you want, Roy.
Yeah, no, I wrote an open letter there. It's one of my most recent posts there on Twitter. Just kind of expressing my concerns. The numbers, and Steven agrees with this, everybody agrees with this, for 2024, that what's known, what's real, are absolutely fantastic. Like they beat expectations. They blew them out of the park. EPS revision for Q1 down slightly. No big deal. The issue is, if you look at the stock price, it started tanking when the actual conference call began. So the issue is in Q3, and I'll be breaking this down next week with the expectations that Alex said. He actually set 3 priorities, and I won't go over them here. We don't really have enough time. Every single one of those priorities that he talked about in Q3, he ended up hitting. Actually, they're working towards. They're hitting all of those. This time, there's some KPIs that he rolled out. The big issue is in Q3, he came out and he said, "This is a growth company." Period, exclamation mark, big bold letters. And he cast that vision. And I was like, great. I think it is too. It might take a little while till the market actually realizes it. And then here, when they do the guidance, they say, okay, here's the guidance. And it's the exact same to the decimal EPS figure for 2023 as it is for 2024. They later say in the comments that they're not guiding for 2024 at all. So that's really just a placeholder slide. There's no expectations except for Q1. But you cannot come in Q3 and say, hey, this is a growth story. This is a growth company. We're not done growing. And then the very next quarter say, guess what, guys? We're not going to guide for 2024, and we're even going to have a slide that shows no growth. When the bear argument is this company is done growing, it's not. You look at what they did in 2024, you look at what they're rolling out, or 2023, you look at what they're rolling out in 2024, the growth isn't done. It may be harder to project. It's fine to do quarter, but it was a major, major misstep by Alex Chris. I still believe in him as an executive, as a CEO. I think that they have a great growth story ahead. It may take longer than I expected. It may not have as much upside as I expected. But the last quarter, I was afraid that he would do a kitchen sink style of earnings. That's when a new CEO comes in and they just throw out everything, including the kitchen sink, that the previous people said. There was just a tiny bit of that in Q3, almost none. This was the kitchen sink earnings. That should have happened last time, not this time. And so it threw people for a loop. We didn't love hearing it. None of us were excited from that call. Tone and stuff, I won't talk about that. Like it could be better, but that was the main issue. But you see the reaction of the market today. We're up like 5%. It's just nothing compared to where the stock was before. But there are people that raise their price targets. There are people that are saying, okay, what's projected is unknown, but what they actually did in Q4 is phenomenal. We believe in these products. We believe the innovation is coming. It may take longer, but there are people that see this as a growth story. So I'm still there. No changes.
There's one thing I'll say from my observation from Wednesday until today. It's how mercurial retail investors are, how quickly they flipped from loving Alex Chris and being like all euphoric about it to now just hating him and saying he needs to be out and all of this other stuff. And it's just ridiculous to me a little bit.
Yeah, let him cook.
Mercurial. Is that what you said?
Yeah.
What?
What?
Subject to sudden or unpredictable changes of mood or mind. That's new to me, man.
I'm a well-read motherfucker, bro.
Good for you.
Tevis wrote the thesaurus.
Hey,
I'm here to learn.
And
Thank you.
guess what? I haven't cursed once tonight. Tevis just cursed.
I know, and he
And
will
you
be
don't
punished.
even bleep him. That's not nice.
Sorry, I thought you were going to.
Steve.
Give me a fucking break.
But I will say, with PayPal, my position's already built out. I have made 0 changes. I did not buy the dip, and there's a reason for that. I need to see proof. I need to see execution over the next 2 quarters. If there's no execution and they continue to not grow, and there's not a really, really good reason for it where they're crystal clear, I will alter my position to the downside. If there is, even if the price is higher, I'll buy more. I bought SoFi. That's the only thing I bought this week.
Only SoFi.
Only SoFi.
Love it. I might start trimming soon. A lot of no, not SoFi. Sorry, not SoFi.
That thin little mustache or what?
Sorry?
That thin little mustache?
It's staying. It's staying. Not that. But Nvidia is getting it's getting up there. It's getting up there. So I might have a lot of extra. I'm not going to get rid of the position. I never ever will. But I think I think the estimates on growth are priced a little to perfection. And I think they'll do fine. But if anything goes wrong, very similarly to what happened with even Adyen, right? Like if there's even a sudden bump in earnings, the stock could go crazy down because the story could get finished. So I might trim a little.
Tanner spent the summer in Paris.
Dude, everyone's talking about your biceps, Roy. Can we get a little flex?
I mean, it's not nothing great.
Hey.
But, it's not too.
Jesus,
not bad.
Roy, my girl's watching, man. Take it easy.
No, I've been working out a little bit, but it's not. One of my sons, though, man, he is like, it's crazy when they get to a certain age that they can just start putting on the meat. His muscles puts me to shame.
Yeah. Okay. Last 2.5 minutes before we head into after hours. What is some other news throughout the week that just blew you guys away?
That Nvidia is as big as the Chinese stock market now.
I love it.
I think
Do any of you guys
Vision Pro is worth looking at, to be honest with everybody.
Sorry?
The Apple Vision Pro is going to change the game, and people are underestimating it.
Yeah,
I want to talk exclusively about that on
Yeah, me too, actually.
on after hours, because that did take the internet by storm.
Mm-hmm.
I was definitely wrong on the amount of sales that they would get. I thought, you know what, this thing is way too expensive. But there's a lot of content creators out there, and there's a lot of people who can afford to buy that.
Well, yeah, but you guys are missing the big picture with it. It's not just about this generation. It's about the next 5 years. They're going to have 1 or 2 more generations of this.
No one ever missed that. No one missed that. I specifically was talking about this version. I totally think that the price is going to come down and that they will get smaller and smaller.
In all seriousness, people buy $3,000 laptops and computers. Why would this be any different?
I think just because it's unproven is what I was thinking. That
once again, this isn't some little company. This is Apple.
Everything
Apple does, they succeed at.
I don't think that
building a new computing platform.
I don't think that $3,500 laptops are the common laptops that are getting sold either.
I'm not saying that
it's half the price.
I'm not saying that they're common, but it's not uncommon for laptops to cost that for the high-end stuff.
I mean, we'll talk about this in the after hours, but I don't know if you guys had a chance to catch the All In podcast earlier today. They were talking about it. And basically the parallel they drew was the first iPad release. Mm-hmm. And they were saying the initial reception was people didn't know the use case for it and they thought it was kind of silly. And then everybody started adopting it. And so the thing that's captivating the market or the wider audience, where are you going?
I gotta go.
Okay. Bye, Steve.
Send me a link to the after hours, but I gotta do Palantir Weekly this week. Or it's earnings week.
All right, you have fun. You have fun.
We see where your priorities lie, Steve.
Well, I did have an article on Palantir come out. I gotta talk about it.
Plus, it's the most exciting company in the world.
Everybody's talking their book, man. I swear. Why'd you put that up, man?
I swear I read it wrong. I thought it said Steve had to be a pooper and then like a party pooper, but it said he had to take that's just, I just dyslexic. I just read it completely wrong. Because he was being a party pooper.
Not being a party pooper. Move the after hours up an hour. I'll come back.
What has this show turned into? Just
I shouldn't even do this for Steve because he's leaving us early, but Matt put this up earlier. Go get Steve to 200 subs.
Oh, thank you.
There's the link right there.
Thank you, Matt.
But that's in your own discretion if you guys the anti-Palantir people maybe shouldn't go do that.
Product, it's interesting, that's all.
On a side note, if you guys want to see, get out of here, Steve.
Did you kick him?
No, I didn't. He left just the perfect time. But I was going to say, if you guys want to see the After Hours show and many shows, every single week from Tevis and I for the After Hours, make sure that you guys hit that join button down below either one of our channels to get access to the After Hours show.
We've actually formed quite a large library of content for members only, and it just becomes a more captivating offer, I think, for new members to join, because I think this is After Hours number 17 or something to that effect. And we've talked about AI, we've talked about specific like large tech and what we think. We've talked about the Tesla bots, we've talked about the metaverse. Now we're going to be covering the Apple Vision Pros. It's more less structured conversation. We're both more stream of consciousness type stuff. So if
it's not live, the After Hours show, it's very hard to post a live video to members, but we do it after this and then post it tomorrow at noon, so you'll get it right around the time that I'm posting that SoFi podcast. And hey, the more times that people sign up for $5 a month, the less I have to be course boy, right? Your boy's got to pay the bills. So either way, I'm promoting one or the other. You guys get to choose. All right.
Thanks, everybody.
Bye for now.